Okay, folks, welcome back. This is our weekend review for the ICT Mentorship for December 13th, 2019. So, happy Friday the 13th. Ooh. So, the dollar index came down to our objective. We were looking for, obviously, the first objective would be the high of the imbalance. So, we talked about this busy buy-side imbalance, sell-side inefficiency. And when price is above that, the first threshold is the high of that imbalance or fair value gap. Then we have consequent encroachment, and then we have the low of the gap. All right, so I rounded, if you look at the video from Wednesday, I rounded the fair value gap's high to 96.60. Okay, the reason why I did that is if you look at the low of this candle, and we're looking at this figure right here. Okay, this candle's low is 96.59. So when price is above, trying to reach down to a premium array, we can round to the near 0 or 5 level. And right in here is 96.59. And it just so happens that was the actual low. And you'll see that right there, 96.59. So again, it's perfect. It's not off by a little bit. It's exactly to the pip. So I want to take your attention back to the discussion I had on Wednesday, where I outlined the immediate rebalance using the wick and tails of the previous candle. In other words, we had this big nice drop down here on Wednesday, a shallow run on the sell side liquidity. I said we were looking for a deeper run on the sell side liquidity. Price created all of this imbalance on the downside. Now, there is no fair value gap here until this candle would close, but it has to have a high lower than this candle's low, this one here, but still be above this candle's low. So it's got to be below this candle's low and above this candle's low. This candle's high had to be. Okay, so that would create that fair value gap. We can trade immediate rebalances in price by using the previous candle, using the low. If there's a tail, and it happens to be here, we have the low, consequent encroachment, which would be the middle of the tail or wick, and then we have the closing price of that candle. So we're going to look at this price right here on this candle right there. Okay, so the close is 97.52. Okay, 97.52. This candle, when it closes, our attention goes to this candle's low, consequent encroachment of the tail or wick, and then the closing price. So when price does in fact show an immediate rebalance, comes right back up to that candle's close. Yesterday's high comes in at exactly 97.52. You can't get any better than to the pip. So it was immediately after teaching it to you on Wednesday, or introducing, let's say it that way. I was introducing it to you on Wednesday, but I had talked about this idea all the way back in 2010 on baby pips when I was teaching the free tutorial stuff and posting videos on that trading forum. I taught that everyone should pay attention to the open, high, low, and close of the daily candles, because it's going to give you a whole lot of context and a whole lot of storyline. And I want, like I said, this all started with a social experiment on my part. I just wanted to see if anyone would figure it out. And I have been laying breadcrumbs for years to see if anybody else could get the same results that I have, and no one's done it. So the interpretation of price action using candlesticks in the traditional sense, like, you know, Steve Nielsen's candlestick stuff and whatever else is out there, and fill in the blank. All those things are just nonsense. There's no validity to it. Zero. There may be an instance where once in a while something might happen and they will falsely attribute it to some sort of candle pattern, okay, and say this is the reason why it happened. But again, they still fall in the same category of 90% of people losing their money. So for the folks that's been here for a long time, this is something that probably is very interesting to you because it's just one more element to precision. But the new folks here are probably looking at this saying, this is unbelievable. Like, how can it be just like this? Well, I can tell you, when the market conditions are right, it's like this every single time. Every single time. So that's why I tell you, I'm not worried about these things failing because it's exactly how the markets work. Everything will trade just like this when it's the right environment because money is on the move. We had to sit through November to wait for things to line up, but come December, everything started moving in our favor. So I really want you to study the effects of the immediate rebounds and also how we had the deferred rebounds, which would be a BISI here, fair value gap. But we treat it like the concept of support and resistance. They have to be touched. That's your first threshold. Then consequent encroachment, which is the middle, and then it's the low of the fair value gap, or in this case, the low of the BISI. When you see these things on a lower time frame, and here's the Thursday. I'll put a daily divider in. And right there. All right, so price is meandering around in here. All of a sudden, it tears off into bearish order block. And this line, okay, is the previous day's close over here. Right in here. So we have Thursday, Wednesday, and then Tuesday. So it's Tuesday's closing price. Okay, Tuesday's closing price. So we're looking at price in here, and it's going to look different because the close isn't going to reflect the daily close because we're looking at an hourly chart. But this is that price, and I extended it out to include Thursday's price action. Thursday runs up into it, hits it perfectly. What's the high of that candle? 97.52. So 97.52 hits it beautifully during the New York session going into London close. Hits it, and then aggressive sell-off. Relative equal lows in here, sell-side liquidity. It's basically sitting at what level? The 97 big figure. So what do we expect with a big figure? In other words, if we're up here, trading at a level I just taught for immediate rebalance, price hits, trades lower, we expect it to run below these equal lows. That's reasonable. But if it's going to trade to and through a big figure, which is 97.00, what's the protocol? 10 pips below? 20 pips below? 30? Or 40? 40. And it went 41 because it went down and made a low of 59. See the low? 96.59. Okay, so everything that I look for on trades were aligned on Thursday. It was all there. Every bit of it was there. So when price creates these immediate rebalances and it uses the candle that creates the imbalance on the downside, in other words, we have a big move on Wednesday, lower. We have to consider Tuesday's low and close, because on Tuesday it was a down close candle. So if that's the case, we have our definitive price levels. The close of Tuesday, the consequent encroachment of the tail on the daily candle, and the daily low on Tuesday. So there's those three particular price levels. We look for sensitivity around that, and also coupling that with time of day. So we have a lot of things to look for, even if we don't have the fair value gap. Okay, because everyone, just like when I introduced the order block, it's like this is the it of trading. You don't need anything else. It's true if that's what you have grown an affinity for, and if that's your setup, just using an order block. And I'm not trying to diminish that, because some of you have worried enough about what you should be doing, and you finally realize that the order block is what you want to be trading off of. I'm not trying to discourage that. But what I'm saying is every time I introduce something new, this is the be-all, end-all. Okay, it's the thing. Okay, but there's lots of things that I still haven't taught yet, and I want you to see. Just think about it. I get accused of a lot of things over the years, and it just seems like some people, just because they've never seen it, they can't see things outlined with a procedure or a process, or defining it in such a way, and then seeing it actually be delivered exactly as it was explained. These are mine. These are my concepts. These are things that you will only grow in your understanding with me pointing them out to you, because just simply saying, looking for immediate rebounds, okay, that's not going to be it. There's other things that you have to put together. And again, that's the mentorship. So when we talk about something in a video, or if I present a lesson about it, that's not it. I've not given anything that is definitive on any one particular topic, because they are just too deep. They're too deep. Okay. There's so many things I have to use to complement them. There's a great deal of synergy that takes place when you understand them as a whole. But I understand the excitement. A lot of you actually sent me emails, said, I can't believe I watched dollar index go right up to Tuesday's close and then turn right there. And that's what it's like. That's that epiphany. That's those moments I told you in the beginning when you first joined. Watching those videos, listen to me talk, you're going to hear me say this throughout the earlier months, because the earlier months were boring and dry back in 2016, because there's a lot of fundamental rehash. But it's essential, because if you don't have that, you're not going to understand me or what I'm referring to. But that moment where you see the things I talk about and outline and teach, and then when you are there at the moment it takes place and you see it, and the words echo in your mind, thinking you're hearing me say it over again, and it's happening right when it happens in the chart, you're witnessing it. There's no better testimony than that right there. Because when you experience that, you're a believer, and nothing's going to be able to deter you, because it's not flubbed. It's not embellished. It's not an exaggeration. It's not some kind of filler. Okay? There's everything I talk about has a place, and it's needed. I don't waste my words on anything, even though I go a long way around describing and defining things. It's there for me to avoid, as much as I can, redundant emails from folks that don't listen the first time or not paying attention. I want to be as careful as I possibly can about how I say it, because it's important when you understand it in the proper context. And it just so happened that we had it outlined on Wednesday, what it looks like, and then dollar delivered exactly right out of what I explained. So just know that this stuff happens more than you realize. Like I said, you've just been recently introduced to it, and that's why I wanted you to go back into your charts yourself and look for examples of that, because when you see it, you're going to be gobsmacked. It's literally like, holy cow, it's been here the whole time. I never understood it. So, again, you have to do the work of going in and looking at it yourself. Otherwise, it's just going to look like I'm cherry picking. These are all the same types of things that I did on baby pips, when I would show my results, or I'd show what I traded, and this was the setup I used, and it was precision back then. Okay, even though I may not have outlined exactly why that order block or that specific level was a key level for me or a target, you're learning that now. And you're seeing that it's not contrived, it's not some kind of fairy tale, it's to the pip. No one does this. I've invested a lot of money pursuing things that supposedly was smart money, this and banker that. It's all joke. Okay, you're seeing the real things. This is exactly how the interbank market trades and books price. Period. End of story. There's no dispute. There's no debate. It's over. You can't deny it. It's there. Okay, and when you see it, when you see these things and you blend other elements, is it hard to fathom being able to pick the daily high and the daily low when you have other things lined up? Because that's what you're looking at right here. Thursday's daily high and low. I basically laid it out there in all the concepts that you've learned. It's right there. To the pip. Well, it's not to the pip, Michael. It's not entirely true. It went down to 96.59. So I was wrong. It went 41 pips there. Okay, but generally, the rules are there for a reason. And you have to have a process to follow these rules. And it can't be just incomplete lessons, because you're not going to get the results that you think you're going to get. And that's what these people do. All around the internet, they're getting pieces, and they're getting sugar rushes because they're seeing small little things that they basically can see momentarily or periodically in charts. And if it's in a demo account, they practice with it and it happens to work. When it doesn't work, they don't understand what to do with it. And they don't know what makes the instances that make it pay out really high probability. So they're still basically doing the same thing as a retail trader. You're looking at things incomplete. So mentorship is me outlining things, giving you the focus on where to look for the market to trade to. And then based on that directional bias, what tools that you have been taught thus far in the mentorship. And if you're a charter member, you have a whole lot of things to reach for. And it helps you frame what setups that you're going to gravitate to. Now, I could spend time, lots of it, and really drive myself crazy and outline a myriad of entry techniques that are taught. And they'll all be different, but you'll still be able to day trade or short-term trade that Thursday's setup. Some of you already can see it, and I mentioned it in passing when I briefly introduced the commentary for this particular chart, where it traded back up into the bearish order block. That would be some of you, that's your model. We went to a premium. The range is here to here. We traded above 50, so now we're at equilibrium or above is a premium, which your array, bearish order block. Why? Why is that bearish order block solid? It's the last up candle before the big move. And it has the fair value gap. See that? So forget what I just taught you, or reintroduced the idea of using the immediate rebounds. You didn't need that, but look how beautiful everything lines up when you have it. Stops dead in its tracks. Boom, boom. There's your classic tweezer top. It'll work then. Otherwise, I wouldn't trust it. And then price starts to careen lower, attacking the sell side liquidity to a level that we outlined this. We have had this level on our charts for months. Look at the sensitivity here. No one else is going to have that. They're going to look at it like, I'm going to say this very carefully. They may have seen the daily chart for the dollar and saw that BISI, okay, buy side imbalance, sell side inefficiency. And because they may have spent some time with Chris Laurie, they're going to expect that to fill in because that's an inefficiency. Well, guess what? Like I said, I don't teach Chris Laurie. I don't teach his concepts. My stuff is way beyond all that. We look at imbalances as real support and resistance because they're going to act as such. And this is an example of that. There are instances when we expect the imbalances to fill in. And that's the reason why people that came in and now they're trying to teach my stuff are teaching people completely backwards. They have no idea what's going on because I am not done teaching. They only know what they've learned from pirated copies of missing pieces. Okay, it's ridiculous to see all these people out here all of a sudden now pretending they have a clue. Institutional this, IPDA that. It's crazy. Okay, because none of them know what they're doing. None of them know what they're doing. And I wish I had the time to spend looking at everyone that's doing it right now and what they basically endured this week with cable. Because unless you're here hearing me telling you about what's going to happen, they didn't expect that move in cable. I guarantee you they didn't. They didn't do it. They're looking for something else. They're waiting for that double high to get ran out and sell short. And then they got blitzed. So anyway, this was such a satisfying week on so many fronts. I've enjoyed this week a great deal. Last weekend, I told you that Wednesday and Thursday were going to be the heavy hitters for the week, and we got that. It was exactly like that. Which brings me up to the point I want to make about economic calendar. Because I'm not outlining the economic calendar for you, I've already showed you where to get that information from. These are the things that you're supposed to be doing every single day. And it's my goal to instill upon you the responsibility to do it. Look at it. Be aware what times certain things are going to come out. And it's just like a TV guide. Well, some of you probably don't even know what a TV guide is now, because when I grew up in the 70s, there used to be a little magazine called the TV Guide, and you probably still can get it. I just don't know if it probably is there, but nonetheless, you can go to the grocery store. It would tell you all the programs that were coming on for the week or that particular week, and what time and channel it would be on. And that's how I look at the economic calendar. It's like my TV guide. When's the important show? The showing in price action. Okay, it used to be like the ABC movie of the week back in the 70s and the 80s, and you would watch a movie that they would put on. It was like that was the spectacle for the week before we had paid TV like HBO and Showtime today. Well, that economic calendar is going to produce that same thing for you as a trader. You want to be in there when there's volatility. That's what I refer to them as a volatility injection. Okay, it's just a way for me to have communicated to myself in note taking back then in the 90s that this is what's going to happen. It's going to create volatility, and the event is injecting the volatility in a otherwise probably still market. And that's what I do. That's how I teach it to you. Now, I want to also teach you the concepts of doing it independently, because you have to do that. And I've been saying this for the last couple of weeks now. If you're not willing to do these things on your own or study, and you're only relying on me and my examples, you're really not getting what you're paying for. And it's not because I'm not delivering it, it's because you're not doing your part, which is going into the charts and studying and pulling out your own examples. You're going to see that there's a whole lot more than I'm showing you, because if I do them for you, you're not going to learn. You're going to grow dependent on me. And that's what we don't want. We want independent thinking here. So anyway, I want you to break this down on a 5-minute chart, this whole move on Thursday. Really study it from all the elements that you've studied up to now in the mentorship. So some of you may be brand new month 1, going into month 2, or charter members. I want you to look at Thursday's movement and consider some of the price action models that you've been taught and what has been taught with them. You only need one setup per week. Okay, one particular setup. A one shot, one kill. Okay, it could be a day trade. It could take several days to unfold. 50 to 75 pips. Thursday had every signature there. Every single one was there. Okay, let's go over to the euro dollar. All right, so here's the euro dollar. It's our daily chart. We had an objective of these equal highs. Buy side liquidity that was resting above that. That was our targeted area for a run higher. And I want you to go back and look at the equal lows here, the order block, I mentioned that we could probably come down here, reclaim that order block, run through it, and come back up. We had a BISI in here. Consequent encroachment hits that, rallies through. Right in here, I believe, if I'm not mistaken, we talked about that on Wednesday. That's that immediate rebalance, because there's no deferred rebalance, because there's the fair value gap. It really doesn't exist until this candle closed. So yes, there was a fair value gap, but it had already done the work here, rebalancing. So I kind of want to talk a little bit about that as your lesson for today. If we have the stage where we have a big candle up like that, and our bias was bullish, now we can thank ICT for that, because I was pointing your attention here. And as long as price was likely to go higher, we're looking for discount or raise. This candle here creates a wick. The next candle, big up close candle, big beefy body candle. So the next candle here, we're expecting, okay, a fair value gap to form. In other words, we want to see a higher low than this candle's high here. So that would create the fair value gap here on this particular candle. This candle would close, and then we would wait for another move lower into the fair value gap that doesn't exist here, but it does create one on this candle here. So this fair value gap here, why didn't we wait to see it come down there to get a buy? Because it already did the rebalance down here. With this wick, big bullish candle, immediate rebalance, consequent encroachment of the wick on that candle, and price goes higher. There's no reason to come back down for the fair value gap here, because it's already done the work here. So if this moving from imbalance to balance, imbalance to balance, back and forth, premium to discount, discount to premium, back and forth, but working inside of a higher time frame narrative that this is where it's going to go up here. This is the draw on liquidity. Don't forget that as the underlying pinnings of the market. That's where we're at. This is the premise. We're going here. All of these days, okay, back and forth, up and down, it's still grinding higher, and it's going to ultimately run for this liquidity. So it's easy for us, if we look at 1 minute, 5 minute, 15-minute charts, and start seeing, oh yes, this is a bearish optimal trade entry, or it's hitting a bearish order block, or there's a bearish breaker. Those premium arrays, we anticipate them to be broken to the upside. We don't sell the idea of looking at short-term premium arrays as significant when we have a higher time frame bias reaching for these equal highs. So we're not, like I said, when we had this down close candle here, I wasn't concerned about that. That didn't change my opinion. It didn't make me think, oh no, it's over. It's coming back down into an area where we expect it to rebalance. Now, people that understand quote-unquote liquidity voids, okay, or price vacuums, they're going to expect this thing to completely close in. We don't. We don't do that. It can. It's wonderful if it does. Great. But it's better for it to come down to consequent encroachment, or just go inside of that gap. Right in here would have been sufficient. Consequent encroachment, even better. But makes it stronger of a buy if it does not fill that, because this gap that remains, because it didn't fill, makes this a breakaway gap. So this fair value gap here that exists here, that is a breakaway gap. This is a measuring gap. And then we have the run to our target, and it's done. We move to the sidelines and we wait for a new setup. That's a process. That's your protocol. Working with a daily bias, using imbalances, using the things I talked about. Right there, I just outlined, whether you realize it or not, I just gave you a complete trading plan. Because you should know how to manage your money already. You should already know that you shouldn't be over trading. All these things will start coming together. And I swear, if it hasn't happened for you yet, it will. I literally had dozens of people in this mentorship. All different levels. Some of them are in core content still, paying monthly. Others are charter members. They all sent similar emails this week. And it was all around last night. Past like 6 o'clock. It's like they all got together in some chat room and said, hey, let's all blitz ICT with the same email, basically. And you all said, I think it just clicked. I think I just had my aha moment. I'm literally shaking right now, ICT. I'm so excited because I can see this now. It's an overwhelming emotional experience when you see it and you understand what you're looking at. Because like I said before, I can't really articulate it because it sounds esoteric. It sounds lofty. It sounds like mumbo jumbo. It sounds like a bunch of crap to people that just are cynical and negative. But when you see it happen in your own study and you see it happen in the charts live and you understand what's about to happen and it happens, that's it. You've done it. You've hit that milestone that you should be looking for. And then once you obtain that, you know exactly what you're looking for as a trader. You're not going to do anything else. You're going to look for those things. And that's what it means to understand what you're looking for and not being swayed by anybody else's impulsive decisions or opinions about a market. Even my own. I won't sway you in your logic about what you're trying to do because my time frame of trading is not going to line up with yours. Guaranteed. If I'm in a day trader's mode or a scalper's mode, you're not going to necessarily know that because I don't sit in front of you and trade. But the things that I look for are going to be based on what the market conditions are at that time. And I don't want to spend any real time in live sessions communicating one particular style over another because to do so, I already know that's going to push people either directly or indirectly into that as their model. And they'll waste time trying to make that happen if they're not going to align with that. I excel on very short-term time frames. That's just me because I have a wiring like that. I can lose my temper very quickly. I can get happy real quick. I'm just short-fused. And I can execute very quickly and change my mind very quickly and have no problems with it. Long-term, I can't sit there like that. I can't do it. I just can't do it. So when we do these things and study and look for elements in price action to deliver a measure of consistency, clarity, precision, you can't help but get excited. And I understand that. And it's nothing wrong with getting excited because you're not making money, you're not losing money, you're getting excited about the process and the progress that you're reaching. And for some of you may be hearing this saying, well, I haven't had that yet, and it makes you feel even worse. Just know that these same people, some of them sent me emails with frustration months ago, and something just clicked where it happened for them. Other people, it clicked when they got into month 5 in the 2017 year. It's all going to be independent for each of you. There's no specific timeline of, I should know it by this, or I should know exactly what I'm doing. It isn't going to work like that. Every one of us have our own internal barriers that we have to overcome. And some of them are going to be so personal that you're not going to be willing to share them with me if we were to sit down in the room and say, this is what's really my problem. And I don't know exactly what that would be, but I'm aware that there can be a mental barrier to your development that you're harboring and you're holding it secret, and you have to confront that personally. You don't need me to do that, but you need to identify what that is, and you only identify it by writing in your journal the things that you're fearful of, that you were fearful of, the things that you're excited about, the things that you got excited about, and the things that you're angry about or what made you angry in that particular market day. And you need to spell it out, but not judging yourself. You're only writing down objective observations. And the only way you're going to grow in understanding who you are and how you're going to interpret price action is you have to confront your emotions and then write them down. You're committing to truth when you write that in a journal because no one's going to read it. It's just for you. And when you know that that's the case, then you're going to be honest with yourself and you're just going to lay it out there. And then when you have periods of good communication between your brain and what the price action is showing in the chart, when you have that, you can see the signatures in yourself by reading what you were thinking and how you were interpreting and what triggers you felt watching price. Same thing is said, and here's even more in terms of growth. When you have poor performance, you need to go back and see what those triggers were. And for me, A lot of it had to do with relationships. Okay, my relationship with my children, my relationship with my wife, and she was my girlfriend at one time before we got married in 2001. The things that were problematic for me were all relationship related. Okay, they were rooted in that. And I would be either angry or looking for some kind of outlet because I was either angry and we had recently had an argument or something, or she was away and I wasn't able to see her, and just being a miserable, lonely person because she wasn't around. She was away with her family somewhere else. I would go into the marketplace and do stupid things because I wanted to distract myself from that pain or that loneliness. So, and that's why I said before, if you don't do the journaling part, you're not equipping yourself for success. You're guaranteeing you're going to lose and you're going to completely take yourself out of the game. It's that important because you're very formidable. You've kept yourself from making lots of money up till now. So think about it. You have to make peace with yourself, and you have to understand how you are going to self-destruct. And by blending all those things and patching, correcting negative thinking with positive thinking, then when you see certain things in charts, you won't have a reaction emotionally. You'll say, oh, I remember this is that thing that I expect this to happen. And you go in and you execute. And because you're not over leveraging your account and you're not over trading your account, taking 15 trades a day, you are in a balanced state of mind. You're objective about what you're looking for. You know exactly what you're looking for because you defined it, and it's rule-based and process-oriented, and you're trading in line with a higher time frame institutional order flow. I give you that part. That's the part that you're going to mess up on as a new trader, and that's why I lend my experience in these commentaries on Wednesday and on the weekend, because I want you focused on the right direction. Generally, I'm right. Not every week, but generally I am. You have to go in and study, whether at hindsight or live. You need to study what you're learning individually. Every single month you're getting new content, new ideas, new things to practice. At your own pace, you're to be studying and implementing that. Every week I'm giving you something to work with. There's homework every single week. I'm telling you a level is supposed to be traded to, and another level should not be traded to. I'm giving you two forms of context: what negates an idea and what solidifies and promotes the idea to panning out. So I've given you the legwork every single week, and you have to go in and practice yourself. The individuals that are doing that, they're seeing the results of it, and I can tell you, it feels amazing. It feels so good to see these folks send this to me, and it's very emotional. It's very emotional because I remember what it was like for me. I was scared. Was it legal for me to know this? This is crazy. And when you look at Thursday's price action, the way price delivered, it's spooky because you were just explained to in very specific details on how rebalances and immediate rebalance occurs and what levels it reaches for. It just immediately does it on the very next day. And it goes to a level we were aiming for, sending Eurodollar to our target and sending GBP way beyond our target. So, very, very, very exciting week. Back to Euro. So we've traded above the buy side liquidity pool, and we've given up majority of that run here. As we get closer to the end of the month, right now it's the 13th of December. Here we have Christmas a week from next Wednesday. Volume really, really drops off. It really drops off. And I'm glad we can close on a strong note here. I don't really have any analysis. Like, that's the reason why I left the dollar index. I don't know what we're going to do next. And I don't want to promote the idea that we should be going into the charts, because I promised my wife, because I was frustrated last 2 years, I kind of like talked about the markets all through the holidays, and I didn't like it. I hated how, because I don't do that. I don't do it. I generally focus those weeks on my family, and I'm going to do that this year. So this week here, we're not going to have anything. It's just going to be a couple charts probably. If anything, I'm not going to be making any videos this particular week because I want the time with my family, and I don't feel that that's a selfish demand on my part, because I'm very consistent about what I give you guys, and I don't get sick and call out. Okay, but these are times where I have to be the dad, the husband, the brother. I have to be all that, and I can't have my extended family, you, taking my attention away from them because they don't see me a lot, because I'm working a lot every single day, even on weekends, preparing things for all of you. So just know that we're basically done for the year. I'll give the Wednesday and weekend review next week, but there won't be anything here. Now, that brings us into January. This whole entire month, I treat that like, let's see what happens. So just know that what I expect to see happen in January, it's only because I'm obligated to sit down and talk to you on a Wednesday and on a weekend. But my trading doesn't really start until the first trading day of February, and that would be the 3rd. Now, again, for some of you that are new, it's like, oh man, this is ridiculous. We got to wait all this time. No, I wait that long. You can go do what you want to do, and you can practice every single day. I'm just saying that my opinions over the years, I don't have a great deal of confidence in the beginning of the year in January, because money is sitting parked, and they're going to be reluctant to just throw it in any old place or any asset. So usually in January, I let that work itself out and see what kind of sentiment builds, and then I work with that if there's an imbalance in February. So that's the process. And if you have been with me since 2010, speaking wholly on the Forex market, folks that know me from the 90s know that there's other things that I do. But the point is for Forex, I don't do anything hardly at all in January. And I've always stated that, even back in 2010 on Baby Pips when I stepped out as a quote-unquote Forex guru. So again, I'll be talking about that again, reminding you all. That's the reason why we're waiting. So the euro dollar. Okay, here we have the daily chart. We blew the equal highs out. All of the rebalancing and leaving this fair value gap, I already mentioned that. This imbalance in here, when we drop into a lower time frame, and zoom out a little bit, look at the sensitivity here, consequent encroachment. Look at all this in here, consequent encroachment, sensitivity around that level. They're working that imbalance. Over here, buy side liquidity, they run it through, but it does it on a single candle. So is this efficient? No. So we're going to have to take it back down into this BISI. So the BISI, which is inside of a daily imbalance, has to spend more time in here to rebalance. It's the amount of time price stays at a level that constitutes a rebalance. It's not just simply it trades there one time. Otherwise, I would have no necessity for a reclaimed order block. Think about it. How much time it stays there. Not the banks can't operate on it trading there in a split second and then running away. It's going to spend a little bit of time around those levels because they have to participate by putting their order in. And all of that takes time, even on an electronic basis, because the opinion has to be formed that, okay, yeah, this is what it is aligning. Therefore, the banks will say, okay, I want to participate on this move here. And they go in and they have to find liquidity to pair up with. So all of that takes time. And if the is programmed in such a way where it allows price to stay at a or very close to, in close proximity to a key level, which is a PD array, premium or discount, but it works within the context of the larger higher time frame institutional order flow, which is that blue line here. This is that equal high buy-side liquidity. It runs aggressively off consequent encroachment, hits it, and then meanders, spending time up here. Why is it doing that? It's allowing the banks to exit at that level that's above equal highs on the daily chart. That's why it spends multiple hours at that level, stabbing it, and finally drops lower. So it's amount of time at a key level that also constitutes a rebalance. It's not just simply because it trades back to an old liquidity void or fills a liquidity void or a gap or fair value gap or a BISI or a SIBI. It's the time that it does it. Okay, and that's a very important thing, what I just said, and it probably went over a lot of your heads, but we will talk about it again in great detail when we go into the trading plans and building and fleshing out the models into an executable format. Let's move on over into cable and close this video up. And again, I don't know what we're going to do next. It's not important to know because we've already seen a great deal come to pass. All right, and here's cable. And let's scrub this over here. One more time, scrunch it up. Here's the equal highs we were looking for that initially. And we got that there. And then we had these relative equal highs, which should be sitting here. I don't know why it's like that. All right, so if we zoom in and take a look at this, because I got a lot of people ask me, how did you get in this big pop-up? Friday, Thursday, Wednesday. Wednesday is the day that we saw our Wednesday review, and I talked about the immediate rebalance. And I told you that the dollar index was going to be reaching for that 96.60 level, which is the top of its daily fair value gap. That was our draw on liquidity on the dollar. So there's our narrative. We're watching and waiting for the dollar to roll over, go lower, and have a deeper run below the sell side liquidity pool. Here's Thursday on cable. This is the Parliament vote. Okay, we open, rally, drop down, all the way down, runs into consequent encroachment of the fair value gap here, which is a BISI. Perfect midpoint. Hits it beautifully, starts to come back up. When it reacted here, I'm watching price intraday on a 1 and 5 minute chart. This run here is seeking liquidity, but it's also running relative equal lows in here. So it's taking out a great deal of sell side liquidity, purging all that. Why would they want to go down there and then start coming back higher? Well, they want to pick up more orders to go higher. To go higher and to profit, they have to buy at a cheaper price. They have to buy it at a discount. So that discount they collected here by running these equal lows and consequent encroachment of this fair value gap, which is a BISI, buy side imbalance, sell side inefficiency, trades down to the midpoint of that, doesn't completely close that in, okay, a la Chris Laurie. It's halfway. Once it hits that and starts to show willingness to go back above this day's low, okay, once it does that, I got a green light because we went down, we left this portion open, which is going to act as what? A breakaway gap. So if the market's unwilling to completely come down here and close all this in on this run, and it's already coming back above the previous day's low, what I did was I split the closing price to the low. There's your consequent encroachment. That range, we're going to look at that in here. Watch. Drop down to an hourly chart. Here's Thursday. Price trades down into that, then starts to trade higher. When price was starting to move back up in here, inside of this hourly candle, we were set to trade higher because we ran down consequent encroachment on the daily fair value gap. traded back above the previous day's low, going into this wick using that immediate rebalance idea, okay, just implementing it with institutional order flow for the daily chart on cable. Drop down to a 5-minute chart. Look at the sensitivity here. Stops, runs aggressive, and here, pause at consequent encroachment. I'm talking about the blue line here and blue line here. That's that wick, okay? And we split it. Look at the sensitivity here. Bounce, 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 run. And this is those equal highs on the daily chart. And if it's going to run through that, we just start looking for the 20s, 50s, 80s, full figures. Okay. If it's going to go through a full figure, is it going to go just 1 pip above it? No. I like to look for 5, 10, 15, 20, 25, 30. But because we had such a long run here on a short time frame, 10 pips above 35 was sufficient. And I think it went to 14 or 15. 35, 14, and 8 pipettes was the high. And then it didn't quite make it here, and then we just started to drift off, go lower. I want you to look at a 1-minute chart here. All right, so here's the 1-minute chart on the British pound, and I want you to take a look at this move here. We rallied aggressively to consequent encroachment. Top of the wick, low of the wick on that daily candle. You're going to have to rewind this part of the video a couple times to really follow along what I'm doing here. It runs up to consequent encroachment, which is the midpoint of this level to this level. So it trades up to that. Then it starts to drift down. As soon as this candle closes right here, what is this? That's a BISI. So we could trade at this candle's low, which is 131.20 and 6 pipettes. If it trades to that price level, I can go long. Limit order 131.20. Next candle trades down to 17. Next candle here trades down to 16. Fill. Rallies higher. Off to the races we go. Then supports top of that wick. Top of the tail on that daily candle that I was referring to before we dropped down to lower time frames. Look at how much time we spent here. Once, twice, 3 times. All this time in here. And it expands up. Unless you're positioned down in here, you're not catching this move, because you're not going to see anything in here otherwise, unless you just feel like you want to chase it. Down here was the move to get in, or run below this low for sell side liquidity run, and then we start to go higher. When you use the wicks and the tails and you look at them as support and resistance like this, it's really fascinating, but it's only applicable if you understand what the higher time frames are likely to do directionally. And it's not important to overthink it right now, because you're probably having your head swirl around it, like, which one do I use? All that will be taught to you. Okay, just right now I want you to personally go into your charts and look at past moves. Okay, previous moves. You've seen me outline something and talk about the concept, and then it delivered the very next day. These things happen every single week. Every single week they happen. And when they combine with other things I'm looking for one shot, one kill, or a day trade, or a session scalp, then I'm in there. And I'm in there like white on rice. I'm all over it. Like, I'm not going to let go of it. Pitbull and pork chop, it's me. I'm not going to sit back and just let it go, because it's one of those things I like to see a lot of factors that constitutes a high probability setup for me. When it's there, I pounce on it. And usually it's my wife is the only one that'll keep me from able to get into it, because she'll say we have to go somewhere, or you get off your phone. And that's the boss speaking, so I have to listen. But other than that, I'm in there. And Thursday, it just had everything on this thing to do what it did. Now, I could sit back and be upset that I didn't get in here at the low here when it dropped down into that fair value gap on the daily right here, when it dropped down into that, when this was careening lower, I knew there's a guy in our mentorship that he's so negative. He was probably grinning thinking, man, yep, you got it wrong. It went down to a logical level that I teach this. Okay, this is a fair value gap. It's the consequent encroachment of the gap. And that's the level that you're taught to look at. And this lesson, I really solidified it more by saying if it doesn't fill the gap, it's good. It's really, really good. It's really bullish then. Especially if we start seeing the price trade aggressively higher. And it does. Previous candle, okay, using the closing price and the low. That tail, okay, we treat that as a gap. Extend that out in time. And it gives you a great deal of insight. It's not supply and demand. It's not Chris Laurie stuff. It's not anything else out there but me. And when I open your understanding to more of this stuff and how they fit together like dovetail, it's crazy. It's literally, it's insanity. If you can wait for the setups. Every single week there's a setup, and it delivers to precise levels that it's undeniable. You can't debate it. It's clockwork, Swiss clockwork. But you have to have the patience to wait for these particular things, and you have to know what you're looking for, and that's a problem for some of you. Some of you don't necessarily know what it is that constitutes a trade or a setup, and that's okay. But that's what the core content does. It gives you pieces. Then I take those pieces and I build price action models. And those price action models get fleshed out in 2020 into specific trading plans. Do this, wait for this. Do this, wait for this. Do this, execute here. Move this, watch this. All those things. It's not as big in... I'm not going to have to write a book, okay, to outline these trading plans. The trading plans will be... You will see, they're very simple. Very, very simple. But they're going to be complicated and feel incomplete because of the lack of participation you had studying the individual components. And once the charter members get these individual trading plans, it will force them to go back through the mentorship content all over again. And then you'll see things, they'll fall right into place. And then that's how it works. Every one of my students that I trained did the same type of thing. We had to do it on a week though, and then they had several weeks after where I would allow them to follow up with me, and I would answer any kind of questions, to fill in the gaps. But most of it was just laid on them, saying, this is what you got to do. You all are spoiled because I do a lot for you, and the ones that don't want to participate and put the work in, you're going to fail, and it's nobody's fault but your own. But here's the thing. If you've been like that up until now, this is the moment where you change it and you can go after, pursue it. You can do this. You absolutely can do it, but you have to give yourself a chance. And that means participate, study. Don't talk to your friends and family about what you're doing. Find time. I don't know where the time's going to come for you to be able to do this. That's your responsibility. That's not my problem. You have your own schedule to master and manage. And there's things in everyone's life that you can prune. It may hurt. It may hurt to take them things out of your life. And for me, I was very honest with everyone when I first came out on the scene. I kept myself away from my family. I isolated myself. And for some of you, that's completely out of the question. And I get it. I understand. But for me, that's how far I was willing to go. And no one was hurt from it. They couldn't hurt me psychologically. They couldn't deter me. They couldn't convince me that what I was doing was stupid. Even as much as they tried initially, I didn't listen to any of that. I took it as personal challenges. Oh, really? None of them are doubting it now. None of them. So trust yourself. Believe that you can do this, regardless of how much time it takes. Because if someone would have sat down and said, it's going to take you 6 years, Michael, honestly, back then, I probably wouldn't have done it. I probably wouldn't have done it. If you and I were meeting for the first time and you asked the question, if I could go back in time and tell myself it's going to take 6 years, knowing the type of person I was and all the things that was going on in my personal life, I would not have stuck with it, because I didn't have someone like you have with me telling you these are normal feelings, these are normal things to go through. I would have quit and said, no way, I can't do it. I got that initial luck going in, and that bug bit me, and I was like, I'm never going to be able to stop doing this now. And because I'm obsessive about everything I do, this is the reason why these lessons are so precise. They're dry, they're hard to listen to, they're boring, but they're necessary. And above all, I thank God for opening my eyes up to these things, because no one teaches this. No one sits down and says, this is what a chart does. None of that stuff's done like that. It doesn't occur. So you are all exposed to something that I believe personally is supernatural. And I don't care if you're an atheist. I don't care if that pisses you off. I don't care if that offends you. That's my belief. And if you don't share in that view, that's fine. I don't care that you don't. But I believe 100% that all these things didn't happen by coincidence. It wasn't luck. It wasn't happenstance. It was meant. It was meant to happen. And I'm thankful that he chose me. So until I talk to you next week, enjoy your weekend. Be safe. Prepare yourself for the holidays, because I'll be doing that. But we'll be doing a normal Wednesday review and a normal weekend review. But then we're going to take the following week off. Okay? So, again, just as a reminder, I'll tell you again to enjoy the holidays. Don't force yourself in front of the charts. The markets aren't going to do anything that exciting, I don't personally believe, because I think we've already seen it now. And everyone else is going to chase and try to force something out before the end of the year. Everyone else in the institutional side of the market, they're looking to scale back risk. They don't want to take on any new risks. Any profits, they don't want to see any of that erode. They want to book it and leave it as it is and wait for the new year to start. And that's pretty much how we're going to do it as well. Unless you want to be a deviant, it's completely up to you. I just don't want to see your email saying, I wish I would have listened to you. So I'll talk to you next week, or I'm sure I'll probably post something on Twitter between now and then. Enjoy your weekend.